A fever is breaking across the semiconductor sector. SMH shed 3.25%, while VIX climbed to 16.13, and that pattern hasn't appeared since last spring's rate hike cycle. The question isn't whether rotation is happening, it's what the Canary metrics reveal about duration of this cooling spell. Speculative capital is coughing. RK dropped 2.74%, while SPHB shed 2.97%, and our proprietary risk appetite index shows speculative leaders below their 30-day moving average for the first time in 2 weeks. The data confirms what traders are whispering. High beta tech exposure has outperformed its immunological response to recent rate volatility, and now the market is expelling excess heat through spec leader rotation. The circulatory system remains stable. High and HYG both flat or near flat, with HYGW holding within 0.1% of its weekly mean. Our credit stress metrics show no cardiac event in sight. Yields are climbing because inflation data is cooling faster than expectations, not because leverage is breaking down. The consensus among the Canary community is that credit remains solvent. This is a temperature spike, not an infection. Fear is warming but contained. VIGXY and UVXY both up 1% plus, VXX rising 0.98%. Our physiological metrics indicate fear has built inventory, similar to early August 2024, when panic selling followed a single day of tech weakness. The indicators are signaling that volatility buyers are positioning for defense rather than flight. They're buying the thermometer, not abandoning the lab. The engine is sputtering but running. SMH's 3.25% drop dragged IWM into 0.97%, yet RSP and Canary remain within 1% of flat territory. Our economic vital signs show semiconductor overextension, not broad-based industrial weakness. SpaceX joining the Nasdaq 100 introduces approximately $27 billion in fresh capital, seeking exposure to aerospace-adjacent infrastructure plays. A new supply chain variable entering our equation. But that's not the real danger. Flight is incomplete and inconsistent. Bond gained 0.54%, while GLD lost 1.04%, and TLT dropped 1.06%. The immune response shows partial rotation, consumers holding defensive positions, XLP plus 0.88 kills rather than abandoning growth entirely. Our safety metrics reveal the market is treating this as a tactical rebalancing event, not a strategic retreat. The portfolio as hero faces one villain today: semiconductor overextension meeting speculative fatigue. The data screams that this isn't a cycle breaker. It's a fever spike requiring controlled medication through rotation rather than surgical intervention. Credit remains healthy. Fear is building inventory but not breaking the patient, and the real economy engine has more runway before coughing becomes pneumonia. The Canary dashboard shows a market in transition. Tech cooling while credit holds steady and fear builds methodically rather than chaotically. Hold your position. Let the fever break on its own timeline. This is how we protect portfolios from overextension, by watching temperature, not panic.